Hey guys, Mike here. So, I wouldn't say the market did very much today because why? It was just waiting on the Fed meeting minutes to come out at 2 p.m. And what's crazy about it is that's actually old data. It's from last month. And shocker, they think we should be raising rates even more and continue until we get inflation under control. So, of course, what did the market do after the minutes come out? It kind of sold off some, right? Even though the Qs ended up green. And, what they're trying to do, like we talked about, is this soft landing, they're going to do rate cuts, which are pretty much evaporated, by the way. I mean, the bond market has been telling us this, and you can see, again, this thing keeps going up, right? Every week I show this to you. Well, now all of a sudden, it's almost at 5.4%. It's like 5.37 to be exact, I believe it is. The line below is where it was at originally. You can see that gap keeps getting larger and larger, and they were cutting rates, as you can see down below, starting in like June or July, and all of a sudden they're like, wait a minute, maybe October, November, December, maybe. And the only reason that would be, why would they cut rates? Because you're setting in a recession, which of course now people are calling for a recession in the second half, fourth quarter, first quarter, 2024 maybe. We'll have to see. And we'll have to see if this gap keeps getting larger, because obviously if yields keep going up, that hurts the stock market, right? Especially if the dollar is strengthening and right behind it. And I think when you look at this chart, to me, it's a busy chart, that's for sure. But let me try to explain this the best I can here. It's like this is the Fed's preferred measure of inflation. Obviously, we know what it is. It's core PCE. And when we look at this, you got the Fed funds rate. You can see right down there with the lines. Then you got personal consumption expenditure, PCE, year over year, obviously really high. Core PCE year over year right there. As you can see, the Fed funds rate is getting up there. We've never defeated inflation, headline inflation that is, until we get the Fed funds rate above it. That's why Volcker did a 20%, by the way, because inflation was so high. The other lines you see there, the little shaded areas of recessions, we hadn't hit one yet. Are we going to hit one over here? We'll have to see. That's usually one of the best ways to get inflation under control. So we'll see if they drive us there. They have, I don't think they've done one soft landing. I think it was in 97 supposedly. But they've never tried to take on something like this. And so that's the main reason, obviously, you're seeing sell pressure. You will continue to see sell pressure as long as the stock market all of a sudden goes, wow, maybe the bond market was trying to tell us something and they're right. They're going to keep raising rates, right? And we only had the 2019, excuse me, where they actually started lowering rates down even before we ever hit a recession and stuff. And so that's something they usually just don't do, right? Which would make good policy. And so, and when we go to the SPY, it ended up slightly red, while the Qs ended up slightly green. But we're looking at some key supports here, right? It comes down this trend line. That is the October low. It just happens to coincide with the 0.50 Fibonacci level as well. You can see below that, you got the 618 coinciding with the other trend line right there. And you got this anchor VWAP as well. This comes from the October 13th and low. We'll see if we can hold it. But if we go to a shorter time frame, you can see it is holding on for dear life. And you see it bounced right off that trend line, trying to hold it. Obviously, we're leaving that gap above still. So now we got a couple gaps above us if they want to go back up and fill those. But that will be much harder to go back up at this point in time versus going down, because now the pressure is downward. And you can see it started to move up from the morning when it dropped down. But then as soon as the minutes were released, sold off immediately and got saved right there. And then if we add in the moving average, you can see right here, that's the 200 moving average is sitting at right now. So we break the 200, that's what we're going to have to see. Again, it's just another kind of level of support to look at. And so there's plenty of them coming down. We'll have to see if we're going to get a bounce or a short-term bounce or anything like that. And going over to a couple other stocks, Meta, I know you're thinking, I don't understand this. It's supposed to be filling this gap. You said it was going to fill the gap, but all it's doing the last 2 days is nothing, right? It's just kind of trading sideways, holding up. Well, of course, what did they do yesterday to hold it up? Introduce another avenue of revenue, right? And then what they do today? Oh, look at this. They're going to start thinking about doing another fresh round of job cuts. They've already laid off 13% of the workforce, but I guess thousands more workers might get laid off as well. They're trying to streamline, cut costs, reorganize, and of course the stock market absolutely loves this. So it's holding up the stock. If you didn't have those two things, there's no doubt in your mind this will still be closing that gap. But again, this is the kind of news the market loves, right? And so layoffs are a good thing right now. Tesla, I know as soon as it opened up this morning, you saw these red candles on the 5-minute chart. People were like, this is it. It's going to 185 or 160. And then what happened? Finally, after weeks of talking about it, that trend line finally got tested. And if we pull out on the arrow, you can see this is the trend line I've been talking about for weeks now that has held up, and bam. You see 2 candles hit it, bounces, And then also it recaptures that anchor VWAP that starts in February that's bounced off 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, like 15 times. And guys, if you get anything out of this, please hit that like button. It really does help the channel. And if you're new here and you like this kind of content, think about hitting the subscribe button. I really appreciate it. And that 200 level on Tesla, I mean, it's a magnet, right? Whether it goes below it, pulls right back up to it, goes above it, sucks it right back down. And I know a lot of people are saying, oh, we're going to 160 really soon, or I see some people picking 80 on it, and I'm like, look, yes, that can happen, absolutely, but it's not going to be easy to push Tesla down. I mean, retail is flooding in using margin and everything else. They're not going to sell. In order to push it way down, you got to have a lot of selling, right? Because you see shorts, they're piling in, which what they're doing, that means they're selling the stock. Every time they sell it, though, it gets bought up. And now if we have another stock market crash, right, we have a real recession, yeah, of course, it should go back down just like everything else. But right now, it's going to be tough. So it'd be interesting to see, what happens. But, looking at something, and this is something I keep the members updated every morning on. This is what people are watching when it comes to figuring out, like, is this a new bull market? Is it just a bear market rally? What is this? And it's the percentage of sectors, and I do the indexes myself, not the sectors, above the 200-day moving average, right? Not the 50, but the 200. And you can see the S&P sitting at 63%. NASDAQ sitting at 63%. The financials, look at those things, 81%, right? Tech, around 64%. You just go through here. I mean, obviously, industrial, 74%. Energy's falling off the cliff here at 43%. Now, all of a sudden, utilities down to 31%. Remember, these are some that were leading last year before they got rotated out of. And the reason why I like looking at this personally, because it lets you know, like, you can see rotate. If you keep up with it constantly, you can see the rotation coming out very easily to go, okay, which ones are pushing up, which stocks are pushing down. And the reason why it's important, because if we do go on another leg down, right, which whether this is it or whether if we do hit a recession and then we take the big leg down, is to understand there's going to be a rotation into something, right? Now, an all-out stock market crash, well, of course not. People are going to try to go in defensive to hide their money or whatever. But just looking at that, you go, oh, okay, tech holding up much better than most people would have thought, right? 63%, nothing to shake a stick at. But, you look at something else and you go, wow, that's down to 31%, okay? And while we're going, if we do start to go down and we just crawl down or go down fast or whatever happens, if that's the case, the other thing, though, guys, not just this, but it's those stocks, because like you'll see like yesterday, the S&P was down 2%. When the S&P is down 2%, that's a bad day because that represents the overall market, right? But if you looked, you would even saw some tech stocks that were green. And you go, what the heck? And one thing you got to look for and pay attention to, I have like a little file I have mine in on TradeView here, a watch list, but and I'm not saying to buy Roblox, I'm just using Roblox as an example. So you can see plain as day, this stock has just been sitting in this range since March of last year. So come March, it'll be a year where it's set there anywhere going from like $23 to $50, just sitting in that range. You can't really get above it. It doesn't really go below it, right? And so there's a lot of stocks like that. PayPal's another one. There's a whole bunch of them out there you can see, whether it be tech or anything else. And then the other one is to keep a list of the stocks that haven't been hit yet, right? Who's the stocks that haven't been hit yet? So this whole thing, Apple, ain't really been hit. Microsoft, right? Those are the big ones, right? Then look at the energy stocks, right? Even oil is starting to have a little trouble now, but the oil stocks still way up. Look at the gambling stocks, like Wynn and them. I mean, they look like meme stocks almost. And look at the charts, you wouldn't think they were casino stocks. But, oh, yes, they're going up. Look at some of I couldn't believe it, but the cruise stocks, straight up. What do you think is going to happen if we hit a real recession? I mean, a real recession. People are going to be cruising. Which ones are going to hit? It's the hardest. The ones that are going to hit the hardest, the one the stock chart was like this, where they're angling up like this. They're going to fall right off a cliff, right? I showed you XLE the other day, and you're seeing other kind of stocks plummet now. The oil stocks are still hanging on because of, obviously, the structural issues and things like that. But, those stocks are going to hit the hardest, and then you're going to be surprised to see these stocks have been basing out, don't get hit as hard because they've already been pounded in the ground, and they've built out all this support. Now, if there's a major market crash, I mean, we drop another 20-25%, of course, everything's going to look terrible, right? But you will see those stocks that have built the bases out, they will absolutely bottom out first. You can almost guarantee it, because on those charts, if you look at their monthly charts, and I was showing this to the members, some of them are oversold on the monthly charts. It is not easy to get oversold or overbought on a monthly chart. All right, this is a big time range, right? It's tough to do. You got to put some effort into it, okay? But if you go back and look, in any crash, when they get oversold in the monthly, it's not long, no matter what's going on in the market, before those are the ones that start bouncing first, right? And so, of course, what's everybody saying? And I've been saying, and it's true, until Apple and Microsoft take the hit, the market will continue to do what it does, right? That's the two stocks make up, what is it, 11, 12% of the S&P, probably what, 18, 19% the NASDAQ all by themselves. Those are the ones you got to see take the hit before we see a big plunge. But just pay attention to those things. Huh? What percentage above the 200-day moving average? What sectors are moving in that direction versus moving down? And then look at all the stocks that are based out, right? First, versus look at the stocks that have no base at all. They have nowhere to go but down because they've been going like this. All right, just pay attention, do what you want to do, but I'm telling you. And then, of course, I'll finish up with earnings. You can see I've been waiting on NVIDIA to put theirs out right now, but they still ain't put it out, even though the stock is up after hours. I assume it was good, but you're going to have Alibaba. I'm looking at Wayfair just for purchasing stuff. That's why I'm not looking for that stuff, because I'm trying to track the consumer, which would be us, of course. Then you have after hours, Block, Carvana. We get to find out how they're still in business. Then you're going to end up with Bookings.com, because I want to see if we're still traveling like crazy. Wish and Beyond Meat are just heavily shorted stocks. And so we'll see how they react if they end up beating earnings and have these crazy moves, or crazy move down could be. And then economic news, you're going to have a busy one with prelim GDP quarter over quarter, unemployment claims. Everybody's going to pay attention to that one, of course. Then you're going to have natural gas storage, which, I mean, natural gas, I don't even know what to say about it. It's just a hot mess right now. I mean, it's just terrible. I don't know when it's going to bounce. It should bounce at some point in time, but it doesn't seem to be doing that, right? And then crude oil inventories, we'll see how that's going to affect oil prices. Right now, they're kind of stagnant. And as I'm recording this, I see NVIDIA finally reported and is up 8%. And wow, gaming revenue dropped 46% year over year. I was like, I guess I'm not playing games anymore. But the good thing is they got a Q1 revenue at $6.5 billion versus $6.35 billion. So that stock might continue to roar. They hit top and bottom line, beat both of them. Let's see, data center revenue was under what was expected. Gaming was, says gaming 1.83 billion versus 1.6 billion for the quarter. So I guess this year over year was bad. Other stuff looks like it's fine. Automated robotics looks good. So yep, I guess that's going to continue roaring. So we'll see how that goes. But, as I say about oil, good thing is oil is staying down. So that's good for us. That's good for inflation news and things like that. So we'll have to see. But anyway, let me know in the comments what you're doing, where you think the market's going. Looks like we're definitely heading for 3,900 versus the 4,300 first. But we'll see. Still got some resistance levels to get through. Again, I don't believe in being a bull or bear camp, so I try to stay as neutral as possible so I can present this data to you as neutral as possible, because you're adults, you're smart people, and you should be able to make up your own mind. And, I don't want to be like certain news channels, wink, wink, not saying who they are, who actually skew the news to fit a narrative, so I don't want to do that. So anyway, hope you got something out of it. Hit the like, subscribe button if you did, and I will see you guys tomorrow.